Out today, here's what Datacentrix earnings look like. Well, looking at those numbers there, now to talk about them is Datacentrix Chairman Gary Marolo, looking at those Datacentrix numbers. Revenue, Gary, over 1 billion rand. You've remarked on that. Is that the first time for a half year that you've exceeded 1 billion rand?
Yes, it is first time. We've been driving at that. The difficulty has been that we've been trying to do that mostly organically as opposed to acquiring.
Yep.
So that makes it a little bit harder.
So I was saying to Robbie Fenter a moment ago, you know, if the revenue's up 8% but the earnings are up by less, then there's some stresses in the business because the top line isn't coming through in the bottom line. Ideally, you want higher earnings than revenue.
Yeah.
It means you're cutting costs. It means you're doing things better. How would you assess your numbers in that kind of light?
Well, we'd like to think that we've been doing better than the revenue growth. I think the numbers speak for themselves.
Well, earnings up 22%.
Yeah. It hasn't always been so because in the last few reporting periods we've been investing quite a lot in the business using our income statement rather than a balance sheet and obviously taking from our profitability to fund that growth and diversification from the business as it used to be. So that used to depress earnings and put margin pressure as well.
Operationally, what have you been doing differently? What have you been doing more of?
Well, as I said, we've been busy repositioning the business whilst keeping the motor running, as it were, and delivering out there. We've repositioned from what you would call primarily an infrastructure-led company and add that more on the commoditized end of the business to where in infrastructure we are at the top end, yes, the systems integrator, but more importantly also diversifying into managed services kind of business where it's now a very important contributor to group profitability.
So if you look at where the economy is at the moment, we were talking earlier about 2% growth would be good. That's how it's looking. Likely possibly to be less than that. How does your mix of business expose you to the economy at present? Are there some areas where you're doing much better than others?
Well, there are areas we're doing. If you just draw the market up into two broad segments, public sector and private sector. In the public sector, we haven't been doing so well. But in the private sector, we've been doing very well. We think we take more than a fair share of the market in that aspect.
So you've grown market share in the private sector?
We've grown market share in almost all our growth, well, not almost, all our growth comes out of the private sector for the last few years. But having said that, it's also quite a constrained market.
And what's gone wrong with the government side? Because the one thing with the government thing, there's advantages. It's kind of annuity income. It's set, it's established. You can rely on it. On the other hand, some companies battle to get the government to pay them. And there are tender issues, and there's a whole process to go through that perhaps is more involved. So what's happened with the government side?
The problems in the government have been myriad. I think many people have talked about them. But
which ones have affected you particularly?
We're not quite sure about that because we seem to have particular challenges in really making a breakthrough in the last 4 or 5 years in terms of government business. We think we do good tenders, we put in good work. Perhaps what we're not doing as well is managing the relationships at the right levels as other companies evidently might be able to.
What about the structure of the business and possible acquisitions? Is it a sector that can still do quite a lot of consolidating at a time like this?
Very much so. We ourselves have mentioned that we're done with that phase where we focusing primarily on organic growth, and we're looking more to leverage our balance sheet now, going out there and doing some acquisitions, judiciously so. And the market will continue to do so. We've seen our peer companies doing a lot of acquisitions, and we think it's time for us now. We've positioned ourselves to be able to do that successfully as well.
What worries you most at the moment for the next year or two ahead, in terms of the business environment and your business in that environment?
Well, you have to worry about corporate activity and how the market will eventually consolidate, how the players will pan out in terms of the marketplace. We ourselves have been looking to be a consolidator, but there are other players who might also look at us. So we have to be mindful of the entire market and see how we come out of it.
A year from now, are we going to look at similar numbers to this? Presumably your revenue, if all goes according to plan, you're going to keep reporting 1 billion rand revenues for the half years. In terms of earnings and costs taking out of the business and that kind of thing?
Yeah, we've always run a very lean business, so cost containment has not been much of an issue. In terms of the numbers themselves, even at the stage, we would have hoped to show better numbers than we have shown. There's always deal slippage and that sort of thing. And we'd hope that we'd catch that plus what we'd hoped for in the second half, going on to show fairly good results.
Another company shrugging off to some extent the tough economic conditions in South Africa. Datacentrix Chairman Gary Marola in the studio.